Trading the foreign exchange market carries high risk and may not be suitable for all investors. Trading on margin, utilizing leverage can carry an even higher level of risk that can lead to a complete loss of investment funds. So before deciding to trade the foreign exchange market or using any of our software alert products, you should carefully and diligently consider your personal investment objectives, level of experience, and risk tolerance. There is a possibility that you could potentially sustain significant loss. You should not invest any capital or trade that you cannot afford to lose. It is your responsibility to be aware of and understand all risks associated with foreign exchange trading and to seek professional advice from an independent certified financial advisor if you have any doubts. Auvoria Prime does not exercise trading authority over your trades. You and you alone exercise discretionary trading authority over every trade.
Welcome, Avorians, to the Forecast for Trade Week call. My name is Steve Vettel. Today's the 9th of January. Can we do a sound check, please, and make sure that we are sharing the right screen? You guys should see the risk disclosure screen and hear my my voice as well. Let's go ahead and begin. Trading in the foreign exchange market carries high risk and may not be suitable for all investors. Trading on margin and utilizing leverage can carry an even higher level of risk that can lead to a complete loss of investment funds. So before deciding to trade the foreign exchange market using any of our software alert products, you should carefully and diligently consider your personal objectives, level of experience, risk tolerance, whether or not you can lose the account. If you're sharing any of the results from using our software tools, which is really only allowed in the designated Facebook groups, please do not use the term company recommended settings. AP does not have any recommending settings. We're not a financial advisory firm. We just license software. We are not a foreign exchange broker. We cannot see inside your brokerage account. We cannot recommend brokerage accounts. We are running software and great education in the AP Live Academy. So I have some notes I'm actually going to show you that I post every week for those of you that may not be familiar with AP Academy Live, which we hope everybody will be able to say in a random survey, yes, I am familiar with it at some point down the road. So that being said, let's close out and close in on the Forex Factory calendar. So this is the week of January 10th to January 16th. And I always like to pull up the old happy calendar here. Just make sure I'm sharing this screen correctly. All right, good. It's forexfactory.com for the question I just got. You always want to make sure you click on the week and you're looking at the current week. So essentially tomorrow, 10th of January through the 16th. Not really a lot going on other than a JPY banking holiday. That's tomorrow. Never understood why the Japanese wanted to report the bank would actually be closed on Sunday, which is strange. So there's nothing going on Monday, Tuesday, Wednesday, which is really the meat of when most of the software is shooting off alerts, you're trading, all that fun stuff. I probably would not be trading around 9:30 a.m. or taking any trades slightly thereafter. On Thursday, January 14th, so approximately 9:30 a.m. Pacific time, Chairman Powell is going to be speaking. Do keep in mind that it's a webinar, so audience questions. Anytime any audience questions are expected, there is a slightly higher level of risk. Hence I'm your risk manager. Of any central banker answering a question slightly out of context of what they normally do, which could send the currency markets into a tailspin. What's this mean for me? This means that you do not, in my opinion, want to be trading during an event like that. I know that much of the software has the ability to be turned off around news, which is good. I rarely take trades in relation to this. And as a matter of fact, if you were to extrapolate literally from election day in the US here, which is the beginning of November, through the end of the year, yes, I understand it is almost a full 2 months that I wasn't trading. Any drawdown that has been experienced during that period of time, I did not suffer because I decided to stay out of the market. So sitting on the sidelines, as a lot of professional traders will tell you, or having the ability to keep one's powder dry and or cash is a position, because a lot of times people are like, well, I don't have any position, I'm not trading, I'm not making any money. Yes, you're not losing any money either. So capital preservation can be a goal during periods of time. And as we get into ridiculously frothy levels in the equity markets globally, even emerging markets, we are looking quite bubblicious in a lot of stuff. Okay. Now, the beauty of currencies and all the software that we offer and any that we bring on board is the vast majority of that software can operate in any climate, right? Whereas all of the long only crowd, this would be most of the professional financial channels, they live on bull markets. Bear markets is when they get crushed and all their advertising sells off, or I should say their advertising doesn't place new ads. So bear markets, even though they create sort of crazy mania, they're not generally good for the vast majority of this planet's asset managers, right? But the cool thing about Forex, added into an additional layer of diversification in one strategy, because I feel you should be investing in all areas, at least during the times that are going up. Forex offers that level of, hey, it doesn't really matter what the hell's going on. Things can still be rocking in Forex. That's one thing I love about, being an active trader. Because I can tell you that from the standpoint of just an absolute inordinate amount of investors on the retail side globally that have been getting involved in everything from options to trading stocks to the mania and Bitcoin to all that. I mean, it's bananas, the level of margin and levels of risk that we're getting to. And I think it's going to be a massive lesson taught to folks globally in whatever they're trading, that things can go down, and they can go down a lot farther, a lot faster than you can ever dream of. And this is a quick shout out to those that I have read on social and fintech, the media, that they're going out and doing ridiculous things like taking a second mortgage out on a home to buy Bitcoin at 40K per coin, which is ludicrous, and honestly, this happened last time, and I was publicly on Twitter a lot more than I am now. And I basically said, and this was many years ago when Bitcoin hit 20, I came out, and you guys could scroll back to any of those timestamps, and I said, look, anybody trading Bitcoin, and we had stories even around Temecula, some of my friends like, yeah, just put all my money in Bitcoin at 20K. I'm like, you're nuts. Turned out it just got absolutely clobbered, right? Dropped all the way down to 4K a coin. And I know personally 2 people lost over $100,000. So lesson be learned, don't get caught up in the mania. Don't get caught up in one of the most dangerous things that exists mentally for an investor. And it's called FOMO, and it stands for fear of missing out. And you can Google the acronym if you wish, and there is exhaustive white paper research out there on this very subject. So onto the charts. Take a quick look at the charts. All right. So let's start off with the S&P 500. Not as relevant, I guess, if you're overseas. Just wanted to always make a mention of what's going on in the 500 largest companies on the planet. It's always important to know collectively what's going on with this in this group. Switch over to the DXY. This is a dollar chart, tradingview.com. Each candle that is red represents a negative day, or a day that it goes down, versus an up day with whatever heck color this is. It looks like teal to me, but maybe I'm going colorblind in my old age. In any case, let me just see if I can maximize this here a little bit. So we've had, we'll be looking at 10 days. We've had approximately a little more than 10 days trading inside this range of the dollar. So we're beginning to build a little bit of a decent base, okay? The calls, and I should say the chorus, if you will, among big spec currency traders, these are institutional folks globally, are that we may actually see a little bit of a relief rally in the dollar that could probably squeeze a lot of shorts, or what I call barbecue them, all the way up to the 92 area. Wouldn't be surprised to see that at this point. We're coming up on a couple areas of confluence before that, primarily the 91.18-ish area probably be the first stop. So what does this mean for me as a subscriber? It means that if we break above this line, we're probably going to run to the next area pretty quickly, because it's the fact it's a short squeeze. So if we look at that and do the exact opposite, we're probably going to pull back in the euro to what would I think should be somewhere in the 21-ish area. We could argue that a much stronger pullback to a much bigger support area, which is almost perfectly at the 100-day line right here. That's this yellow line. So this would definitely be an area that if I was accepting trades that we broke underneath this, we're probably going to zoom to this point pretty quickly. I could be wrong and we could continue higher, right? Always looking for in anybody's plan, where can I be wrong, so that you can do the research. I try not to run through these markets with horse blinders on in order to be able to see 360, which is very difficult to do. Really, the primary tone of any of this type of exercise and technical analysis is so that everybody can become accustomed to and have it just be almost a second reaction when you're looking at a chart. Okay, here, we spent some time with a decent base, may break below that. Where can we head, right? And how quickly can we head there? The answers to those questions are tough to know, but it will help in agreeing to take certain trades. Okay, so GBP USD. Actually, I posted that. Oh yeah, okay. Hey, do me a favor if you would, Roger. Can you post? I don't know what the heck I did with that link. I have so many links in these bookmarks, as you guys have probably seen. I have just a bananas amount of links in here. But I mean, look how big the Auvoria section is just in of itself. That's just a ton of stuff. So sometimes I forget the bookmark stuff, but if you could post that, that would be great, because I'll tell you that Waiting for Last Dance article, very good stuff. So a lot of questions I've gotten, I had a couple emailed to me last week, had a couple just dropped into the Q&A window, which is open. If you guys have questions, pop in Q&A. A lot of people are wondering why there's been some strength in, and this applies to literally anything, any commodity, any currency. Once something, especially if you put it in the context of a whole year, and we're not really a whole year here, we're almost a whole year on this daily chart. Each of these candles is a single day, by the way. See how far we've come down in the US dollar. Okay, so on, and I'm not going to expand it out, and I don't have it on longer term charts, but if you look at a weekly or monthly chart of anything and you overlay what's called Bollinger Bands, Keltner channel, standard deviation lines, they're all just measures of stretchness to some degree, right? Doesn't really matter what line you use. We're stretched, okay, real stretched. And the same could be said that is on the other side of every other pair in relation to the US dollar. So some snapback is required typically. So currencies are usually mean reverting markets, meaning that along with many commodities and a lot of other stuff that trades globally, at least on an active liquid market, they have a tendency to want to snap back to other levels. So usually once you get the troops running in one particular way, I like to look at it as a stampede going off the side of a cliff, right? There's so many of them, things are rolling so far, so fast, kind of like all the longs in Tesla right now, right? They just don't see the cliff, and it's up there. And if you're not watching, what's going on way ahead, you're going off the cliff. So a lot of institutional traders and many globally at a lot of funds, they're positioned really short the dollar, looking for 85, 87, and it's never a straight trip to some of those big areas. So, and let me just go to a weekly chart to give you some sort of context on this. I don't know that this blue line, which I drew yesterday, is really placed the best. But basically somewhere in this area, let's see if I can expand out price chart. Somewhere in this area is a pretty big long-term support line, okay? The 89.70 line was given to me by a friend because I was asking him, if you were to pinpoint our next stop, where would it be? He's like, it shouldn't be a surprise. We're bouncing here and or may take a much bigger trip back up to the 92 area, just because of how big of a support area this is long term, how stretched out we've been in terms of a decline. Yes, this country has added a lot of debt, so there certainly is an argument for the dollar to drop. But once things, are looked at much more from at least an institutional or a fundamental or a money supply standpoint from some sort of global analyst, they will always say things like, well, yes, but the US has the strongest economy globally, right? Not always the case, right? China, unfortunately, is pulling up behind us pretty quickly, which is kind of scary. But at the same time, typically we are looked at globally as the country with the best numbers, right? Even though we've added a whole bunch of trillion to that. I certainly hope we can bail ourselves out and it's not kicked down the road to my children, but we can only hope. So that's kind of a long-term, long drawn-out explanation as to why the dollar had some rally. I could be wrong, right? So happy New Year, everybody. I see lots of happy New Year's. Thank you, thank you. Yeah, thank you. Let me see if this is working. There we go. So if you guys do not know, I don't really have a lot of true experts that I sort of look to, right? I have a couple of traders that are really good. Jeremy Grantham is one of them. In addition to him, Tommy Thornton, hedge fund telemetry, Raoul Paul, real vision. These guys are not necessarily personal friends of mine, but I got them on the Rolodex speed dial. They are very, very well sought after, CNBC, all that stuff, Bloomberg. But I have a tendency from just a risk manager standpoint, especially since I'm running large capital for a whole bunch of clients, I have to always be looking for the cliff at the end of the stampede, right? So I spend a lot of time looking for that. And I always want different opinions because let's face it, there's many times I've been wrong. Prognostication is a difficult endeavor, very, very much so. So I try to look to other experts, hence on Twitter, which isn't necessarily the favorite platform of many people after the last week. And I think Twitter is going to be going down in flames, but that's just my personal opinion. But you can follow me on Twitter, and it's just at FXES Trader. This is me here. Mostly I tell students and the subscribers do that, not because I'm looking for followers, because I don't really give a shit if there's a bunch of followers or not. I just want to have everybody following smart people and reading their information. Okay. So the folks that I follow on Twitter are very good at what they do. Many of them are absolute tops in their field. If you can look past sports and some of the other people I follow, there are a lot of thought leaders, and I try to really only use Twitter from that standpoint. It's not an area where I choose to get chatty about politics, but if there's some sort of political movement that could affect prices of anything that we trade, I will usually post something like that, like some tax bill that's being passed, or some large movement by a central bank in some sort of plan. So use the fintech media or any media in the financial media, use it to your advantage of always being able to try and suck out from whoever's talking of whether they're full crap, talking their book up, or if they can offer some genuine insight into what's going on. And oh, by the way, another guy I just started following, and I'll tell you guys, this is really unrelated to finance, but where is it? Yeah, here it is. James Clear is a guy I just started following. And I'll tell you, James, this guy has some fancy. This is actually my favorite book in terms of just general motivation. Grant Cardone's 10X is a close behind it. But James Clear, who's gained just massive notoriety over the last couple of years, his book, Atomic Habits, is fantastic. I've had the outline of this book. I've made my kids just read through this over and over again because it really is some good stuff. So he's unrelated to any kind of risk management. I just think it would be good for everybody to always get in a favorable habit mood with the new year. So in any case, I digress. So let's go back to the charts. You want, I can post this link to him on Twitter. Here, let me just do that. A couple people asked me for that. And I'll tell you, there's so many self-help people out there, but man, this guy is good. All right, here we go. Let's enter this. Make sure to post to all people. There you go. So he does a top 10 tweets of the year, which is this thread. This is something that I put. I put a lot of this stuff on outlines. I stick it up in the Office 365 cloud, and I shoot it out to some friends, give it to my kids, stuff like that. So talking more about just kind of what's going on. I like things in quick read outline form. So let's take a look at the USD. I'm actually going to show these two variables here. I wanted to chat about those as well. So let's get rid of, oh yeah, here we go. All right, so just a quick on Euro USD. Let's move back to the daily chart. Okay, so we're in a tight range. Let me reset this. All right, cool. So you guys kind of have an idea what my thoughts are on Euro USD. If you came in late, let me know. I can reassess. GBP USD, again, holding super solid. Just right under this 366 line. Okay. Euro JPY. Now, this kind of gets into what I talk a lot about on my notes. Let me just bring up these notes. I don't know if a lot of you guys have seen these notes. I hope you have. If you're not, and this is news to you, it will help you with just understanding what's going on. But I post these notes in the AP back office every weekend. And what it is just, what's going on, snapshots of this, links to my Telegram channel, obviously the Forex Factor count I just showed you with the, but events to look for on the coming week. Okay. So this is actually pretty good. I mean, obviously it's everything, right? There's commodities in here. There's all kinds of stuff, oil. But I think it's important that we're coming up on a Euro GBP golden cross, okay, which is the opposite of a death cross. So I want to make sure everybody's clear on that. We're close to that on Euro GBP, and I don't have that chart up. I don't have the time to kind of dig into it, but I did want everybody just to understand what a golden cross is. So I obviously will usually, when it comes to things, tell everybody to Google it. But essentially, golden cross is a positive momentum indicator. So it's occurring when a security short-term price moving average moves above its long-term moving average. So it's essentially a cross, right? So it's the opposite of a golden cross, it's that death cross, marking a point where short-term price moves below the long-term average. So typically, once any kind of cross sort of plays out, and you can see a bazillion pictures here on this. This is a picture that's particularly effective in showing this. It can continue a trend, okay? So in my, and I don't know who these guys are, but I think it'd just be good to just kind of show it. So here's the cross. We were in an indecision point. And obviously this is an individual equity or a stock here trading, but the concept's kind of the same. In this case, it's a cross of a 50 and a 200, which is typically the crosses are based on moving averages, whether they're SMAs or EMAs, doesn't really matter. It's just the change that could be a potential continuation of trend or a change in trends, just a heads up. All right. One of the questions I got was USD CHF. This has been beating up some accounts in December, and it, again, it all gets back to that protracted move that the dollar's made, right? But you can see this is daily chart on USD Swissy, and let's go back to a monthly chart. So we can see if we can adjust out the price range here a little. See how we're really coming up on, I should say we've already bounced off of like a big term, I should say a big time, a long-term support level here. Okay, you guys see this? Almost perfectly the 8800 area. Okay, so it's no surprise that we bounce off this, stay at this point, form some type of range. You know, again, each of these candles represents 1 month, so we're looking back. This thing actually also has the ability to break these down, you know, via weeklies or looking at particular ranges. But I usually just stick to some time-based chart, if you guys notice. And a lot of people throw things on, you know, all kinds of stuff, some sort of range bar or whatever. I mean, you can do all that, but the key thing is price action typically leads the way in technical analysis, and then support and resistance is very close next to it in terms of durability of any particular chart pattern holding out. And this one's a big one. So I would expect us to stay here at some point, unless some sort of big global macro thing breaks, like the US announces another bailout package. So just keep on alert for the idiots in DC potentially releasing another package. Again, it's just devaluing to the dollar, right? It's going to send the dollar down generally, and everything else that's on the other side of that the other way. Okay. All right. I prefer a simple moving average. There are arguments out there for an exponential moving average for the one question I just got. So, Annalie asks, can you recommend any books or pages on the internet regarding trading for beginners? I would just Google it. You know, there really is a lot of stuff out there. Typically, the great thing about Google, other than censoring all your stuff, as far as the search engine, the great thing about Google is that usually the best stuff shows up first, meaning the stuff that's clicked on the most, right? So that's actually fairly useful for a beginning trading, but I would just Google it. There's actually a lot of stuff out there. Same thing. I would go to YouTube and do the same thing. Yes, Happy New Year as well. Thank you. All right, so let me just take a quick peek through here. Okay, so just so you guys know, it's a lot easier for me if you guys post the questions not in the chat room, unless you're asking everybody else, which is cool. But if you want me to answer the question, you got to post it in the chat when I can delete them, because I just blew through 15 questions. Yeah, there you go. Now, I've heard a lot about this. Let me see if I can show this to everybody. Yeah, this is actually pretty good. I have not spent enough time. There's probably stuff I could learn on this site. So here's babypips.com. There's a beginning guide to FX trading. Okay. Or, you know, you have the education. Looks like they got quizzes. I know that we, with some of the changes we've made to AP Academy, we've somewhat structured it similar to this because I think it's good. I love the fact that they offer quizzes. Sort of makes you like, ah, God, I got to cover the material because I'm going to get quizzed on it, right? So, yeah, it's good. So, question is, it's just babypips.com. Check it out. All right. Yes. Keep in mind, though, you guys, as I've talked a lot about, you got to go through a Days Ace course as well. What else we got here? Okay, Marta asks, how much cash would you recommend keeping your portfolio considering current market conditions? This is such a tough question to answer. And Vlad, and by the way, you find that document that I post, which is right here, in the back office, AP Academy. You know, you go under products, all that. Somebody wants to post a link to that for Vlad, and that'd be cool. But essentially, I go through everything, what's going on up and down. It's a lot of disclaimer stuff in here. These are the Telegram channels for the 3 pieces of active software, where each of these developers, you know, shoots a video, talks a lot, posts their chat, and then it follows with in this particular case. This is the chat from Tyler for Gearbox, okay, which posts on his channel as well. And then the same thing, this is Dasan stuff for Variable, right? We don't get any notes from Nathan, but Nathan is super active in Arrow, you guys. And so if you really want to trade Arrow, I would go just, you know, peel through that. There is a ridiculously large growing group in the Arrow, what they call bag chat. It's 830 members now, guys. Get on the train. And I just post all this stuff. So it's in the back office. Somebody wants to post a link to this, go for it. All right, what else? Can you explain the sustainability of tools like Arrow as far as liquidity goes as Auvoria Prime expands and more people use the tool? Yeah, so Brent asked a good question that, you know, it's almost like a self-fulfilling prophecy question. There is just such liquidity in Forex, and there are so many manual and automated systems out there that trade it, you know, using whatever type of technical analysis or algos they're using. Don't let your heart be troubled that it's not going to work. And I'll give you an example. I trade the futures markets just as actively as Forex, maybe much more so, because I can use some of my analysis tool you guys have heard me talk way too much about, which is essentially market profile, putting an auctioning process on both a volume and time-based charts. Much more difficult to do in Forex because there's not a lot of trackable volume, at least that is executed on a single exchange, like trading the E-minis on the CME is. All the same trading patterns and everything still works 8 years later in the Forex markets. I use the same setups. I use the same type of analysis. Nothing's changed. Now, what kind of has changed that it's hard to track is that the algos that are out there built against, that are gamed against you, that I can't answer. But, you know, Nathan's methods have worked for a long time. I would expect that to continue so as well. Sustainability, like that question. Now, the other question was asked that I think I should probably expand upon is how much cash would you recommend keeping in your portfolio considering current market conditions? I actually kind of like the current market conditions right now. I mean, you know, if you've looked at any of Dasan's live accounts that he has my FX books for, which I can show you guys, he has, you know, it's actually done quite well over the last month, albeit I really didn't want to be trading over the holidays, especially since I figured the US dollar was going to break lower, which sends typically most algos that are not trending algos, you know, they're range based or at cost averaging algos, it usually sends them into a tailspin, right? So this is where really bringing in additional licenses, and I understand it costs more money. I get it. You know, go out and find 3 people, as I always joke to my team whenever I hear any complaints about cost. Go find 3 people. But having, you know, at a minimum, a gold license, I have a platinum set up now, so I'm going to be trading all of them. And I think it just adds additional layers of diversification. And if you can actually throw some manual trades out, you know, a lot of people working from home now. And unfortunately, you know, probably a decent chunk of our subscribers, you know, are having employment issues with COVID. You know, I hope everybody gets back in gear, but, you know, a lot of people are at home and they've got more time. So it certainly argues against anybody saying, I don't have time to trade Arrow, you know, even yours truly. So, especially since Governor Newsom's got us on lockdown and the knuckleheads in Sacramento. All right, so What I tell students, clients, subscribers, it's all the same message. You can't be trading with capital that you can't afford to lose. So I'll give an example. Somebody has a monthly expense of 5 Gs, and this be US dollars, right? And it covers their rent and food, maybe all the other incidentals that are required to run a family. You really should have, in my opinion, $5, $10, $20,000 in reserves. If in fact, your income is right somewhere in the $5,000 a month level, build up a reserve account of maybe 10 or 15,000 bucks. You could be higher, these are your own goals, but you usually want to have at least 3 months of reserves in cash. Beyond that, you could start to invest, right? So because and most of the people that have not paid attention to settings are usually the ones that don't watch my calls or pay attention to the developers. They just look at a couple of FX book links from somebody in their up or down line that's had some crazy returns. They don't demo it and they go live, right? That's nobody on our team, by the way. So because we'll slap them. They'll be excommunicated from the squad because we want them to be plugged in. So the key with any kind of buildup of capital, if you will, is you got to have reserves first. Beyond that, it's your call as to what you want to do to start investing, right? So I always recommend if you're employed by some sort of corporation offers a retirement account, which is called a 401k in the US, you want to make sure that you invest in that as well because it's tax-free. At least until you draw out of the account. But it can grow completely tax deferred and it can compound in hopefully a quality diversified portfolio. But outside of that, you can start to build up personal investing accounts to invest in different kinds of stuff. Maybe you want to put a few grand into a Forex account, right? So that's, it may not be something that everybody wants to hear. I get it. But from the standpoint of a financial advisor, that is the best advice that can be given to any younger person when they start investing. Build up, obviously don't overspend each month. Don't roll up a bunch of money on credit cards, right? Unless you are really that good of a trader and you've demonstrated it to yourself and, you can access capital some way. But I never, ever recommend to anybody taking out another mortgage against a house to trade, right? Borrowing money from somebody to trade, and trading with money you can ill afford to lose inside of some sort of cash reserves fund, right? Hopefully that is a long drawn out answer to your question. So I don't know the answer to that question, Roger. Tell you what, can you actually, Roger, can you send me an email on that question? That'd be great. I'd use the inbox as kind of like a to-do list. So your variable 1.0, I'm not sure what Dasan's release time is on that. You'd have to ask. I can ask him that question if you want. I don't know. I know he's trying hard to get these. He's ironed out most of the issues. There's a few issues. He's trying to iron it out. 1.10 is the release he's looking for. No, I'm not looking for that version. It's a much more advanced version. Post email and chat. Right, here you go. That's Federal at. There you go. This is my email. Do not take this email like we caught one subscriber doing, which is ragingly sneaky. And he signed me up for a bunch of stupid services because we'll find you. will unleash my super hacker buddies on you. Okay, let's see. So I think those are all the comments I wanted to make on this doc. So this typically, we've been trying to get this doc out earlier Saturday. I'm really at the will of the developers to get these notes done. We've made a concerted effort to try and get these notes done by Saturday afternoon Pacific time, in which case I get the document off and it gets posted, to answer that question. Yes, we already talked about it, Bronson. The question is always asked, Bronson, if somebody should step in front of the software to close something out. The first answer to that question is this real capital? Second question, if in fact it is, since it looks like you jumped on late, is it real capital that you can or cannot afford to lose? You need to be ragingly honest with yourself about that question, okay? If it is, then usually you shouldn't have been trading in the first place, right? But if it isn't, then I rarely ever tell anybody to step in front of the software to close something out, because then you're basically saying I'm smarter than the software. I'm not smarter than any of these softwares, guys, and I don't think anybody is, and maybe other than the developers, right? Because they can see what it's going to take, and they'll know the sequences of trades it'll be building into as far as cost averaging and so forth. David, that is a very difficult question to answer. I would Google that. Any way explaining the difference between regular divergence and hidden divergence, okay? That is an hour answer just right there. And honestly, I'd probably lose most of the audience with that. Good questions, guys. Keep them coming. Yeah, and keep in mind, and I try not to get too detailed on this because we're sort of getting away from the Forex discussion, but you know, I find myself doing the same thing with our entire team. Is, you know, we've ran, and keep in mind, I'm actually going to shoot. I don't know how it's probably going to be an hour long, but because I kind of need to be able to run down my usual tangential diatribes to get a point across. But I'm actually going to shoot a whole hour on financial planning. So there'll be a US and an overseas version where it shows that at a bare minimum, in a course of a year, as long as you're not overspending and in major debt, in which case, you know, I'll put on my Dave Ramsey hat, right, and tell you to pay your debt down, bottom line. But once you're past the debt, you should be putting money in a retirement account. Just know that in the US, the Roth IRA is a single best tax deferred plan, if you will, to invest in this entire country. Bottom line. And you put money into a Roth, you can put chunks a year into it. And if you're older, you can put, you know, 5-6 grand in the course of a year or more in some cases. There's some changes coming, I think, to some of that stuff with adjustments in the Pandemic Relief Act or the CARES Act coming out. So stay tuned on any changes on those numbers. But, you know, in a perfect world, in a given year, you have, you know, all debt or low debt. You have contributions going into a 401k, because remember, time's on the side if you're young, right? Even though a lot of people are like, you know, it's only a couple $100 a month or it's $1,000 a month. That stuff adds up huge in compounding, as long as you're in an equity-based funds portfolio as far as choices in the 401k over a long period of time. You know, our team spends an inordinate amount of time with the Legacy Launchpad group of running compounding calculators and the power of compounding, which I'm not going to bore you guys with, but it's a fantastic concept over a long period of time. I mean, 30, 40 years, you know, I mean, I regularly, you know, get referred to folks that, you know, spent 35 years at Boeing. You know, maybe they only made, you know, 85, 95, 125K a year US dollars. They'll have $1.2 million in the 401k rolled over in an IRA, right? And you just have a lot more flexibility rolling it out of a 401k into an IRA. And then there's different stuff you can do with it, right? But outside of retirement accounts, you know, if you have the budget, should be building, you know, taxable accounts as well, right? It shouldn't just be all retirement. because if it's taxable, you can, there's a greater areas of diversification that you can get into, right? Forex, you can trade options, you can have different levels of long and short, different types of instruments to be able to trade. All right, so let me just cruise through some of these questions, make sure I got them all right. Arrow has been doing really well, but just like I see a number of posts in there, it really just depends on how much time and capital you're trading. And the key thing to anything, you as a manual trader, some sort of trading system, an EA, an algo that runs in the bottom line in any of this is what's the win rate. It's really the key, right? So if you go into, and I'll show you a variable. So this is the more active variable that Dasan runs, 3K real. It's Cotex 4 is the broker. This thing's done really well. Okay, we're beginning to build, arguably a small sample size of trades. It's 229 have been executed so far, but look at the win rates, right? See this? Oops, pretty good stuff. Typically, win rates anything over 55% is actually really good. You start getting up into mid high 60s or higher, it's actually really good. Some of the win rates in Arrow are over 80%. If, and that's an if, you follow the rules. There's a bunch of them. But you do have to spend the time watching for these trades to develop. So there's where that time, and honestly, the interesting thing about that is that we have, in our group, we've had a number of people come in and they started off on Arrow. And because of the fact they had to put the time in front of the screens, again, right, this is all risk mitigation stuff I'm trying to teach, right? And the education surrounding this is a big component of the risk mitigation. The fact that they went in and sort of forced themselves to understand the rules, and there's 10 different there's 10 plus strategies, what to look for, do's and don'ts. It's not difficult. A 5-year-old could do this, no kidding, in terms of following the rules. It's forced them to learn at least generic technical analysis, but an understanding of how to open accounts and how to do all that. And I think in a perfect world we'd have like an automatic onboarding system, which I hope that day comes around, or we have a group within Auvoria that does automatic onboarding, but that the subscriber has to sort of witness this take place. That'll help educate them, essentially being walked through the onboarding. And then in addition to that, starting off with something like an Arrow, which sort of forces you to be there and learn, right? And then I think you have the ability, especially as you see, you're making money, much more motivation to maybe add another license, bring something that's maybe a MAV version, that will shoot you the recommendations, that'll shoot you the trades to approve. And if you're, outside of the US, you can get, versions that'll actually execute the trade for you. So, but the point is you're getting a sort of throwing into the deep end of the pool, but it's not that deep, right? And the sides are pretty close. And Stevie's always over there with a life raft. So, all right, so we got that. What else here? Would you recommend diversifying a savings account? It seems like a good idea to have money in multiple assets as a better store of value than just the US dollar. I'll tell you, this is probably because I guess the answer to that is one should probably get a little more educated on blockchain, right? And I've probably been sort of that last old Wall Street guy, right? That's like, blockchain, any kind of crypto, boo, but it's coming. So if in fact you want to get, more educated on how the blockchain operates and or crypto, which much to the surprise of many of my colleagues, I'm starting to dive deeper into it. But that is not a recommendation to be buying Bitcoin at 40K a coin. Now, if you had bought it at 4K a coin, you're up tenfold, and you certainly could be like, hey, I'm the king, but don't let that type of performance go to your head. Start to diversify it out into other stuff. But you could also own gold as well. Many different forms. All right, what else? Coming up on an hour here, guys. I don't want to drag this out too much longer, so let me just peel through all these. Yeah, and there certainly is arguments. Certainly is arguments. I would just want to see a pretty decent pullback in Bitcoin. Now that it's traded for a period of time, it is chartable. It is technically analyzable. Yeah, is that a new word? Right. Just do it with the money you guys can afford to lose, guys, because I'll tell you, I saw a lot of people pouring into crypto at 20K, and this was many years ago, and they just got crushed. So just understand that. Some central banker opens up their mouth, right? Some sort of negative comment from some big global hedge fund guy, right? It's all could be in there. You have to be willing to ride it out. That may be something that may be worth a small amount of averaging down on, right? So somebody has 100,000 to invest. You have some Forex, you have some IRAs, obviously, you have, maybe 5, 6, 7K in crypto. That'd be about it for me. And what else do I want to talk about here? So a lot of this stuff showing some great promise. It's great that we've been able to iron a lot of this stuff out and bring in Nathan. So I'm actually going to be meeting with Nathan tomorrow, you guys. So him and I are going to have sort of our Sunday powwow, which we're going to do here and there. He's got some stuff he wants to show me. He wants some advice on strategically. I need to learn more about Arrow, obviously. So we're going to do that. I'll probably have more to report on Tuesday as to how the meeting goes, and what he wants to do. He wants to expand Arrow out into other areas. I don't know what. I don't know how effective it would be. Don't ask me any questions on it. Don't ask the guys in the bag chat room. This is just strictly brainstorming at this point, to determine, all that funny stuff. So Sharon just posted something inside here, and I have a Prime account through Amazon. So it's called Blockchain, and maybe I'll watch that, because I'll still be reading about this stuff. It's just like, it's like reading a book on Tom DeMark. If you guys don't know who he is, you can Google him, but it's like reading a book written by, some MIT mathematics professor, and it's as detailed as can be, and it just goes into all this stuff, and it's just, it's flying over but if maybe they can position it in a more basic structure, kind of like pretend I'm a 5-year-old on explain a blockchain to me, right? Which I already understand what it is, but in terms of its usefulness, it does have applications in the financial system, especially as far as settling out bank transactions. But there's a bazillion other application potentials for it, as well. Yeah, no kidding. So I'll check that out. Thank you for the advice, Sharon. Appreciate it. Yeah, there's another guy named, if you guys want this guy, because I know this guy is like just like a super expert. Mariska just hooked us up with this. You guys should probably Google this guy if you want to learn more about blockchain and crypto and all these subjects. I'm not going to get into this. You guys could just take his name down. Here, I'll post it. It just helps build your education. I'm not going to get too detailed about this on these calls. I get it. It's a hot topic, but it's popped before. Just like I think Tesla's going to pop. I'll tell you, I had a friend that just, and this is just betting the farm. This is just the absolute polar antithesis of what I preach, right? But this is a funny story. He's actually a very wealthy guy. But he just went out and bought about $65,000 in Tesla leaps. If you guys know what that is. Tesla leaps are long-term put options. You're basically betting on the direction of Tesla to go down. And leaps, unlike short-term options, have long-term expirations. So basically, he's got over a year for Tesla. He got these things wicked cheap. So there's probably a good chance he could turn that 65 grand into a few $100,000. So I'll keep you updated on that. All right. What else? Andreas here. I've covered that. So this is Iris Fusion, guys. If you want this link, here, I'll show you. I do not know much about this, okay? Just a heads up. It's another piece of software. I only have so much time in a day to learn these softwares. All right, everybody, I'm going to bow out. Got to get going here. Anybody's got any questions, please save them, type them up, drop them in the Q&A window. I wish everybody a healthy and happy 2021. Hopefully it's not going to be as shitty as 2020, which is a piece of crap for a lot of people. Although I had a good year, so I was pretty pumped. But it has been a stress. So hopefully we can have a much better year going forward. Please educate yourselves using the AP Academy. All of Adeze Duncan's information is really good, maybe in addition to, or then help educate yourself. But if you guys be safe. Federal off the mic.